Hi, I want to talk to you about systematizing and quickly creating cash flow forecasts. For those of you who are providing these services to your clients already, you know why this is important. For those of you who aren't, just do a quick recap as to why. So when you step back and look at the cash flow forecasting process from your client's perspective, all they see is the end forecast itself, as well as the conversation that you're having around. It's the dialogue around the guidance and expertise that you're providing. So of course, from a client's perspective, that's where they're putting all the value because that's all they see. It's not to say that they don't value the forecast at all. They just see more value around your presentation of it, as well as your discussion points around it. So again, when you look at the cash flow forecasting process as a whole, whether you spend 2 minutes, 2 hours, 2 weeks, 2 months creating your forecast, it isn't entirely irrelevant, but it's a lot less relevant than the end finished product discussions around it. And so getting from the starting point to that end cash flow forecast as quickly as it's possible, as accurately as possible, is extremely important. That's why systematizing everything as well as getting to it quickly is extremely valuable for it, because you can save a lot of time and effort and get to the real value part of the equation, client's perspective. So now, of course, in saying all of that, when someone steps back, a professional steps back and looks at their cash flow forecast process as a whole, they're probably using spreadsheets 9 times out of 10. Spreadsheets, unfortunately, go counter to everything I just said. Spreadsheets are extremely customizable, which also makes them really prone to errors. They're hard to scale because of that, because you're continually checking for errors. If you've passed something off to a peer or an employee, you often have to check it. They're not easily scalable or systematized. They're also really hard and take a lot of time to set up and maintain. And at the end of the day, your client probably doesn't understand them because they came to you, the financial expert, to tell them the numbers. They're probably not as savvy in reading spreadsheets as you are. And so that point alone makes spreadsheets really hard to talk about when it comes to the actual cash flow conversation. So of course, having all those problems in mind, a lot of professionals move to apps, and apps are not necessarily a panacea. They don't necessarily solve all these same problems. A lot of them are built to look exactly like spreadsheets. So your clients, again, don't necessarily understand them. It can also be hard to set up and maintain just in terms of lots of clicks in and lots of clicks out. So you don't necessarily alleviate that time to set up and maintain problem either. Often you also will run into more complexities around apps, which means sometimes the algorithms that are used to create the forecast aren't easily explained. And of course, that goes counter to everything the client puts value on, which is your guidance and expertise. If you can't explain how your forecast was built, it's going to be really hard to provide that ultimate end value to your client. So that's why we really need to systematize and standardize and get to that cash flow as quickly as possible. We want to be able to get there quick. We want everybody on our team to be able to get there quick. We want to be able to explain it really easily. Really want to drive that value for the client. Of course, that's ultimately why we built Helm in the first place, is to solve all of those problems. So I'll show you right now just how easy it is to set up a forecast in Helm and get to that end cash flow conversation. So to start off by creating the company, we'll just click here, enter in our company name and the time zone. We use time zones because you're actually able to create payments directly out of Helm. We'll connect to an accounting system. So I've now selected my accounting system, and Helm is now connecting to it and helping create the forecast by importing some of the accounting data. Now that we've created a connection, we'll go through and we'll calculate our accounts receivable timing. So what the system's doing here is taking information from the accounting system and telling us if payment trends continue, this is what they'll be in the future. We'll do the same thing for accounts payable. And then we'll create forecasting rules that look forward into the future. Because of course, bank balances, accounts receivable, and accounts payable are all past looking data. So you can see here in a very short frame of time, we've created a cash flow forecast. The only thing left for me to do is use my knowledge about business and where they want to go and put that into the forecast as well. But what this does is it gets me to that point extremely quickly. I just need to add in that information with a few more clicks, and I can get straight to that high value cash flow conversation with my client.